Hey guys, welcome back to the channel. In today's video, we're going to talk about the best way to track tax reserves with Lendio. It's going to be a quick one. We're not going to waste too much time on this topic, so let's get straight into it. Now, the best way to track tax revenue with Lendio is to treat taxes as committed money, not excess cash. Because many businesses run into trouble by spending revenue without accounting for future tax obligations. Lendio helps to prevent this by providing clear visibility into income and cash flows, which of course makes it easier to estimate exactly how much should be reserved as revenue is earned. Now, by regularly reviewing income reports, businesses can align tax reserves with actual earnings instead of relying on rough projections. This consistency removes uncertainty and reduces last-minute stress during tax seasons. Now, over time, tax reserves grow steadily, which of course turns large tax payments into manageable events rather than, financial shocks. Separating tax funds from operating cash also strengthens financial discipline. Spending decisions become more intentional, budgets and more realistic, and planning are a lot more reliable. With Lendio, business gains confidence knowing tax obligations are already accounted for, allowing them to, of course, to focus on growth without worrying about unexpected tax shortfalls. So yeah, that's pretty much it for the video, guys. Hope you liked it. Hope you found the information here useful enough. If you did, like, comment, share, and subscribe for more helpful tutorials. Thank you guys for watching, and I'll see you in the next one.